So guys, we're finally onto the last section of the technical part of the course, I would say. Obviously, next we've got fundamentals, but it's the last part, last piece to the puzzle for the technical side. So first thing we're going to be looking at is risk management. And this psychology and mindset, honestly, is such a big difference. And when it comes to technical strategies, so you can have any strategy in the world, whether it be retail or whatever it is, as long as you've got a win rate and perfect risk management, you're always going to be profitable. If you're winning at least half the trades and your risk management is good, I mean, you're going to be going far in this business at least. So I'm just going to be explaining my risk management sort of strategy and then what you can possibly do as well. So on a normal size account, for me, this is anywhere in a few hundred, few thousand, whatever it may be. Personally, I only risk between 1% and 2% a trade. Very rarely do I even risk 2%. It's always between 0.5 and 1%. The reason for that is because on my normal size accounts, I usually trade uh, confirmation trades, uh, not really many risk trades. So my stop loss is usually below, I don't know, below 10 pips, between 5 and 10 pips, sometimes even less than that. So it would be not stupid, but it would be risky of me to risk 2% on that kind of trade. You know what I mean? It's 1%. Obviously, it's a smaller account than any of the funded accounts. So anywhere between then is good. Online, people say 3% is all right as well. Personally, I don't really stick to that because 3 losses in a row can really, really hurt your account. But if you're just trading 1%, it will actually really take time for you to see losses in your account. And then obviously risk to reward. If you've got a positive and a good number, then your account is just going to grow substantially. One other thing, do not overexpose yourself in more than one similar currency pair at a time. So if you remember from the last section that we were talking about, choosing your currency pairs, when it comes to that, it's like, for example, Euro USD and GBP USD are two of the main currency pairs I look at. But I always make sure that I just stick to one of them at the time and sort of keep the other one on the sidelines because I don't want to over risk on two of the same sort of similar pairs. For example, if USD goes the same way and it goes against my direction, then I'm in two losing trades. Now, when it comes to losing trades, me personally, two losing trades in a day and I stop trading that day, no matter what it is, because two trades that day for my sort of plan is a lot anyways. And but then again, it depends. If you're seeing a lot of good order flow in the day, I would go in a few more times. I mean, the max I think I would ever really let myself trade in a day is what, maybe 3, 4 trades, nothing more than that. But usually in a week, it's only about 3 or 4 trades throughout the entire week from Monday to Friday. Because Mondays and Fridays, I barely even trade them days. So it's usually Tuesday, Wednesday, Thursday, couple of trades, then 3 days is all right. Avoid trading outside trading plan at all times. This I don't even have to mention this, but it's so key and people really do forget it. Keep your trading plan printed out. Keep it where your desk is, where your monitor is, or laptop, wherever it is. Keep it printed out and read it like it's a script. Because once trading starts to become systematic and your strategy is working well, then you start to see the profits coming in. And for me, I would say that that took me, let's just say, a few months, for example, to really sort of stick to my plan. And sometimes, even now, um, I'd find myself, for example, over risking on a trade or doubling down when I shouldn't be. And that's something where I have to refer back to my trading plan because, you know, diverting from that is never going to end well. You might be lucky here and there where one of the trades that you've over leveraged on goes really well, but that luck is there's no luck in the market. This is all systematic. You're coming up in quite possibly one of the hardest industries in the world, where I think it's a stat 90% of retail traders drop out within 90 days or something like that. It's ridiculous. And then again, never overtrade. Now, when it comes to funded accounts, this is something that I'm going to be going through as well, because obviously the way to actually make money in this industry is through larger accounts and being able to grow that efficiently. I risk 0.5% to 1% on a higher time frame trade. So this will be, for example, a risk trade that we talk about, gets to a point of interest. and then you put a sell limit on there, buy limit. And then when it comes to lower time frame trades, when I'm doing maybe a 1 minute Wyckoff accumulation, I would risk 0.25% on that trade. When it comes to that, if you really think about it, 0.25% and you hit a 1 to 10, that's 2.5% gain. And you're risking very, very minimal amounts. I wouldn't want to risk any more than 0.25% on that. Sometimes it happens, you know, up to 0.5, but there I've got to make sure my stop loss is just a bit bigger. Do not overexpose yourself in the same currency pair at the same time. And then again, the 2 losing trades in a day, to stop trading that day. Avoid trading outside the plan and never overtrade. Overtrading kills most people that I know, especially when they over leverage and they overtrade, because they try to do the revenge trading. It's called in this industry, when you have a tiny losing streak and you're trying to get that back, and you're trying to get that money back, but eventually it just leads you into a hole where you keep losing and losing. If this ever happens to me, I always take some time off the markets, get my head away from it. I just completely stop trading, focus on some other things at the time, whether it be studies or, you know, just whatever it might be, just focusing on anything else. So yeah, risk management is going to be the most key thing, I would say, in this whole sort of strategy. You need to stick to it, and it's the most simple thing. Use an appropriate site. I can send in a risk management position size calculator if you guys need, but I'm pretty sure if you're trading, most of you have one anyways. It's just the general one I use on FX Street, I believe it is. But yeah, guys, anyways, take care, and please take this take this seriously. Risk management is so important. All right, guys, see you in the next video.